In today's video, I'm going to talk about the various mistakes committed by investors in India. I'm meeting a lot of investors in the awareness programs as well as the clients who come and meet me regularly. The general question they are raising is they are not happy with some of the funds performance, they are not happy with the stocks they have purchased, or they have lost some money while doing some trading. So I was analyzing various aspects when I discussed the issues with some of my clients. I was very surprised when one of the old person, senior citizen, walked into my office and said, after retirement, I have chosen trading as a strategy for creating wealth for himself. So I asked him, what do you do when you say trading? So he said, I go to my broker's office, sit there and start doing trading on a daily basis to make money. I asked him, do you have enough knowledge? Have you studied anything on technical? Have you got any aspect to say whether you will be able to be successful while doing trading? He said, yes, I have seen some videos of option trading and I have also attended few classes and I am very confident that I will be able to make money in option trading. I was really surprised. I said, generally, I have not come across many who do trading to be successful unless they are really professionals who are in the job of doing day trading. But later on, when he came and met me after 6 months, he told me that he lost substantial money and he blamed somebody for this. He said, some wrong calls came to me and I lost money. But I knew for sure that he's going to be the loser ever since he met me. Then I told him he put money in the mutual fund on a regular basis to get about 10 or 12%. Then immediately he told me these option traders are giving me 25-30% and you are saying 10-12%. I said this is not sustainable at all. So the best thing is I would recommend don't go for trading. Don't involve yourself in futures and option segment because it is not meant for a normal retail investor. It is not going to give you money. And SEBI's findings the last year proved that over 90% of the people have lost money. So I don't think you're going to be a successful person by deploying your valuable saving into this criteria. The second important point I want to tell investors is you can't chase returns. Many people who come to me, they always aim at 25%, 30% return. Today, is it possible to get 25% return in today's world? I asked them, what is the State Bank of India is offering you a return? The answer is 7%. If State Bank of India is going to give you 7% per annum as a return, how on earth somebody can give you 25% return by offering you some schemes? Many people come to me and say, sir, money multiplier schemes are available in and around Chennai and I have given 20 lakhs, 30 lakhs. When I analyze them, I find that these monies are not going to come back at all. Having said that, they come back after 6 months or 1 year saying that the person who collected the money has disappeared from the scene altogether. This is happening for the last 40 years. And even today, if you open the newspaper, you find people are losing money. Then I further analyzed the reason why people are doing this. When I was asking one lady who invested 10 lakhs with a person who was promised them 30% return, I asked her why you went and put money to him. Is it because you are greedy? She said, I am not greedy, but my expenses have gone up. I am not able to meet both ends. So I thought if I get better return, I'll be well off. So two things are important here to understand. One, I told her very clearly, you have to cut down your expenses. You have to live within your means. If your income is 25,000, you need to save 2,000 rupees and expend 23,000. You cannot spend 40,000 by borrowing money or by putting money in some place thinking that you will get back 25% return. It is not going to happen. Nobody is going to give you better return because your expenses are high. There is no free lunch anywhere. So he understood that very well. And she also concurred with me that it was a mistake on our part. But why should we keep on learning by doing costly mistakes like this? I always used to tell them, there used to be a person called Ponzi in Italy 120 years ago who resorted to these kind of activities. And after cheating few people in Italy, he went off to USA and he made a big mark by collecting money, offering double, collecting $1,000 and then offering $2,000 in a short period of time. And he was very successful for a short period. And after that, you got arrested and ultimately the investors lost money. So the money multiplier scheme has been named after Ponzi, who originated from Italy and moved on to USA. So if somebody offers you more than 15% interest, you must ask him whether you are from the family of Ponzi or you are a Ponzi yourself. If we don't understand this and keep losing money, that means we are fooling ourselves on a regular basis. So never expect more than SBI rate by giving it to somebody. This happens everywhere. I was surprised when an IT person, a senior lady, came and met me about a couple of years ago. She told me that she is a bit worried about equity volatility. She told me that I'm a bit worried whether the market will go up or down. So I asked her, where are you putting your money? Then she told me she has put 15 lakhs in a small private fund recommended by some family members. So I asked her how much return they have given you and are you sure you're going to get back your money? Then she told me, yes, 2 years back when I gave the money, they said I will get back after 2 years with 15% return. But unfortunately, that person who was running it, he got into some sickness and the fund got closed and he is unable to return the money. But he has promised to return over a period of 5-6 years. My family people are now saying, I don't know what to do, but we have lost the money completely. But the best part is, she is questioning me whether I'll get 12% from mutual funds over a period of 5 to 6 years. What I want to communicate here is, you will never lose 100% when you're putting in an equity market, even if you're going to put for 1 year or 2 years. But if you're going to put in a scheme like Ponzi, 100% loss is inevitable. So let us understand, if you're ready to lose 10 to 12% losses in the first 2 years, then equity may be all right to begin with. And over a period of 6-7 years, you will get not less than 10 to 12% annualized return, although it is not guaranteed. So the idea here is to understand, we should go for regulated scheme only while doing the investment. When I analyze with the people, I understand people go for unregulated scheme. What is unregulated? Not regulated by RBI, not regulated by SEBI, not regulated by IRDA, not regulated by PFRDA. You just go and give money to a neighbor thinking that he's going to give you some kind of a return. It will never happen. So let us not lose our hard-earned savings in the name of getting higher return by giving it to somebody to make money for us. Like I said, only professionals can invest money in a professional way, in a regulated scheme, which can give you better return over a period of time. You can never become rich by putting money in equity market in 1 year's time or 6 months' time. A lot of youngsters come to me and say, what return can we get by putting money immediately in equity and can I get 20% return? This will never happen is my answer. If you are not having enough patience and if you are not looking at long term and if you are not ready to wait for 6-7 years, equity is not the asset class you should look at. So we have to be very careful while looking at investing our money, and we must avoid the investment mistakes which has been happening regularly. How do I overcome this? Financial literacy is the main thing. I'm very happy that you are all viewing my video today. Understand the importance of investing in a regulated scheme and to know which asset class can give what kind of a return. You need to attend the awareness program, see the videos like this, and also read the newspapers on a regular basis. All these things will enhance your knowledge, and ultimately the risk can be mitigated to some extent. So risk is always there while investing, but it is up to you to decide whether you are going to take a bigger risk or a smaller risk. But definitely you need to be watchful and avoid the mistakes which are happening in the past. Likewise, I want to conclude by saying you need to look at products which are capable of creating returns on a longer duration and which are capable of giving you a decent return over a period of time. Thank you very much.